Hi everyone, today I'm with Dom and we are going to be doing a new stock analysis video on Hubspot. Dom's going to go ahead with the company analysis and the earnings. All right, Dom, whenever you're ready. All right,
Alrighty.
thank you.
Can you see my screen?
Yeah, perfect.
Great. So like Matt mentioned, we're going over a company called HubSpot. So we're going to talk a little bit about them and just kind of see what their business is about. So this article nicely summarizes what they do. So it says HubSpot is an AI-powered customer platform that brings marketing, sales, service, operations, and a whole website together in one place. Basically, it's so you don't have to have different applications for different parts of your business. So you can kind of put them all in one section. Then it automates it and helps you essentially run your business more efficiently by having it all in one place. And so they kind of mention other aspects that, their business kind of helps you deal with. So it talks about attracting visitors by publishing blogs, podcasts, social media campaigns, targeting ads, capturing leads, landing pages, email sequences, smart forms for converting leads. It says close customers, hands off leads to sales reps with all historical interactions intact. Helps retain customers by offering personalized service at scale, automated customer engagement. And then it says by having happy customers turns them into brand promoters. So overall, it's just kind of like a catch-all for a lot of things most businesses are going to need in terms of marketing, sales, service, all that stuff I mentioned prior. So it's just kind of nice for businesses not having to piecemeal it all together. So now that we know kind of what they do and a little bit about it, we will switch over to their recent earnings. So we have Q3 of 2025. So let's kind of take a look and see how their numbers stacked up. So revenue they have at 810 million, up 18.4% year over year in constant currency. Operating margin is at 20%. They say total customers increased by 10,900, reaching nearly 279,000. Subscription revenue growth at 21% year over year. Services and other revenue growth 19% on an as reported basis. Domestic revenue growth 17% year over year. International revenue growth 20% in constant currency, 25% as reported. Average subscription revenue per customer 11,600, up 1 point year over year in constant currency, 3 points as reported. They say customer dollar retention's high 80s. That revenue retention 103%, flat sequentially. Well, not the best, but still doing a good number. Calculated billings 804 million, growing 19% year over year in constant currency. Net income 140 million, or $2.66 per fully diluted share. Free cash flow, one of our favorites, 147 million, 18% of revenue. Cash and marketable securities 1.7 billion at the end of September. Share repurchases, also good to see, 780,000 shares at 375 million. Q4 guidance, revenue guidance is at 828 million to 830 million, which is up 16% year over year in constant currency. They have Q4 non-GAAP operating profit margin 22%, Q4 non-GAAP diluted net income per share $2.97 to $2.99. Full year 2025 revenue guidance 3.113 billion to 3.115 billion, up 18% year over year in constant currency. Excuse me. Full year 2025 non-GAAP operating profit margin 18%. Full year 2025 non-GAAP diluted net income per share at $9.60 to $9.62. And then finally, full year 2025 free cash flow guidance about 580 million. So I would say overall pretty good Q3. A lot of positives, a little bit of stagnation. Like we kind of saw net revenue retention still is about 103%, so nothing too crazy there. Other things up quite a bit over year, so not too bad. So we'll let Matt take over, and he'll kind of talk about more of the details of their finances, and we'll dig into that.
All right, thank you, Dom. I appreciate it. Really good analysis.
Oh, thank you.
Okay, so like Dom was saying, they've actually been doing quite well, and I think this is actually quite a nice company. So just looking at of course, the free cash flow, it's really good actually. So we have that it's currently 530 million in the next 3 years. It's going to be, we could round it up to like 1.1 billion. So it's definitely a double and really good for that, especially for the size of the company. Market cap's about 20 billion. So for this space too, that's pretty crowded. Considering that it could still double, is still a really good sign for this company and its health of it. It's still growing. The financial health of the company is also really fantastic. You have that there's no debt. Yeah, it looks like they paid it off, all of it. They had 458 million and now it's zero. A lot of cash, a lot of equity. So fantastic on that front. So, and great for the management team as well. When we take a look at my DCF is going to say that it is 34% undervalued, which is really good to see. And I probably agree with that as well. Wall Street forecast. Wall Street's going to say that it's overvalued by 5%. I don't know. I don't, it's already on its drawdown, its 52-week low. It's like 11% outside of that from its 52-week low. So I don't think it's too overvalued, to be quite honest with you. And lastly, we're going to check Tipranks. It's going to look a little different, but Tipranks, 24 buys, 3 holds, 52% upside. You got a low of 450, an average of 582, and a high of 800. And this I definitely agree with. Had a little bit of a sell off to start the year, but I still think it's a really remarkable company overall. Dom, is there anything else you wanted to add?
Um, nah, not too much. I definitely would agree that it does have some really good future ahead of it, especially because, like you mentioned, they paid off all that debt,
Yeah,
so it always helps in the long run.
yeah, of course. Okay. All right. Thank you, Dom. I appreciate it.
Thank you.